and welcome back. I'm Rachel and you're watching 𝐾𝐤𝐴 TV live from Sydney. This is the Stocks in Action show. Let's have a look at the ASX 200 and the ASX listed stocks that are trending today. The S&P ASX 200 is up today, gaining 47.7 points or 0.68 thousand so far to 7,093.60. The top performing stocks in this index are 𝐊𝐴24 and Kogan.com, up 5.90% and 5.46% respectively. Over the last 5 days, the index has gained 0.39% and is currently 1.10% off its 52-week high. All 11 sectors are higher today along the S&P ASX 200 index. A-REITs is the best performing sector, gaining 1.10% and 2.59% for the past 5 days. On that note, let us look at a few key global and domestic developments now. Payroll jobs remain above pre-pandemic levels. The Australian Bureau of Statistics has published its latest releases on weekly payroll jobs and wages in Australia. And according to today's release, payroll jobs fell by 0.5% in the fortnight to the 8th of May 2021, following a 0.2% rise in the previous fortnight. Moving on. Head of Labour Statistics at the ABS, Bjorn Jarvis, reports that in early May, payroll jobs were 1.5% above pre-pandemic levels and 1.5% lower than the end of March 2021. The end of JobKeeper, seasonality in the labour market around Easter, and short-term restrictions in some states may influence payroll job levels in the weeks between the end of March and the 8th of May. Next in the news, exports in Australia record a historic high of $36 billion. It's according to preliminary trade data released today by the Australian Bureau of Statistics. The April 2021 merchandise goods trade surplus was noted at $10.1 billion, the third highest on record. Moving on now, ABS Head of International Statistics, Andrew Tomadini, said the exports remained steady, increasing $12.6 million in April, but imports fell $1.9 billion, adding to the already strong surplus recorded in March. Meanwhile, increases in the exports of coal, petroleum, metalliferous ores and medicinal and pharmaceutical products were offset by declines in non-monetary gold and oil seeds. However, the continued strength of the metalliferous ores has contributed to total exports for April 2021 reaching a record high of $36 billion. Moving on now to US markets. US technology stocks are stealing the limelight today. The US stocks settled higher as economic optimism increased amid reopening of the economy during the coronavirus pandemic. The tech stocks recovered, benefiting from a rebound in Bitcoin's value. Facebook shares surged 2.7%, Alphabet gained 2.6%, Microsoft added 2.3%, and Apple advanced 1.3%. On Wall Street, the S&P 500 climbed 1%. The Dow Jones surged 0.55% and the Nasdaq jumped 1.4% higher. The crude oil prices jumped on Monday amid speculations that sanctions on Iran may not be raised. While the WTI crude oil price was up 3.75% to $65.96 a barrel, the Brent crude oil price rose 3% to $68.45 a barrel. Energy stocks such as Woodside Petroleum and Beach Energy could be in focus today. On the other hand, the weak US dollar and bond yields pushed up prices of gold on Monday. The spot gold price rose 0.4% to $1,883 an ounce. Gold stocks such as Evolution Mining would be closely tracked. Iron ore producers such as Fortescue Metals and Rio Tinto could be under pressure on Tuesday after iron ore prices fell. The iron ore prices were down $11.85 or 5.9% to $188.25 a tonne. That's according to S&P Global Platts. Copper prices rose on Monday after recording a near month's low as the weaker dollar spurred a modest purchase. Copper futures for July delivery traded 0.19%. at $4.54 a pound on COMEX as the 25th of May 2021 at 10:47 this morning, Australian Eastern Standard Time. The partial increase in the prices can be attributed to the weaker US dollar, making it easier to purchase the metal for other currency holders. However, the prices dipped to a nearby 1-month low level before Monday on China's decision to cap commodity prices to restrict the unreasonable increase in prices. The bets on copper were cut by 9,000 lots in the last week as per Commodities Futures Trading Commission data. Supply disruptions from the leading suppliers, including Chile and Peru, supported the red metal. However, higher outputs in Congo, Indonesia, Panama, Mongolia and Russia offset the supply deficit. It's time for a very short break now, but stay tuned. I'll be back very shortly with trending ASX listed stocks.
𝐾𝐿𝐼 Media is delighted to invite business experts for an exclusively curated live webinar titled Spotlight on Businesses Amid the Digital Boom and Commodities Supercycle on May 27th, 2021, where we get industry leaders to talk about their businesses amid the digital boom and or commodities supercycle, straight from the studios here in Sydney, Australia. 𝐾𝐿𝐼 Media offers you a great opportunity to learn from the subject matter experts and get exclusive insights on the business vision, strategy and the latest achievements. Get a chance to directly hear from those honchos of prominent companies making leeway amid the fluctuating market scenario. Their names include Paul Stephen, the CEO of Alton Rio, and Calvin Yap, the CMO of IOU Pay. So what is a commodity price supercycle and what makes it different from short-term boom and bust business cycles? Paul Stephen from mining exploration company Alton Rio will throw light on the commodity supercycle and also unveil the company's future plans. And not just this, hear Calvin Yap of IOU Pay talk about successes, challenges and the way forward for businesses amid the digital boom witnessed during the pandemic. The pandemic brought the shift to digital much faster than anticipated, and how is the business maximising its digital transformation? Get insights on the above businesses and much more only on 𝐾𝐿𝐼's Invest Nest webinar. So what are you waiting for? Join us in our upcoming webinar. Save the date and book your slot now. 𝐾𝐿𝐼 Media will see you on the 27th of May 2021 at 12:30 Australian Eastern Standard Time. The registration link is mentioned in the description below, and for more information please visit the website 𝐾𝐿𝐼media.com or get in touch with our representatives on 029042 2308. Stay apprised with market moves and trending updates with 𝐾𝐿𝐼 Media.
Hello and welcome back. I'm Rachel. You're watching 𝐾𝐿𝐼 TV live from Sydney. This is the Stocks in Action show. Let's have a look at some major news from ASX listed companies from across the sectors. Airtasker successfully raised $20.7 million through a fully underwritten share placement to investors at $1 per share. The funds generated will aid the 𝐊𝐿𝐼 Inc. acquisition, expansion into key city markets in the US and the UK, and the offer costs. Their shares are seeing a rise today. Moving on now, Z Energy announced they're entering into an in-principle agreement with Refining New Zealand. That's a New Zealand-based company to transition the refining into an import terminal system. The 10-year agreement is a non-binding one and is likely to deliver flexibility, pricing transparency, and most importantly, reduce the environmental impact. It will also help in decreasing the volatility to their earnings and release working capital from the supply chain. Meanwhile, this ASX listed stock is in the news today. The share price of XNX Energy rose as much as 3.6% to $3.16 during midday trading. marking its highest level since the 10th of May this year. The natural gas producer has announced the appointment of Simon Eleanor as the Chief Financial Officer of the company. The firm had previously announced that the current serving CFO, Mark McCabe, was appointed to the role of Chief Commercial Officer. Moving on now, Dr. Care has struck a deal with the UK health firm. The share price of Dr. Care Anywhere Group gained as much as 9.9% to 89 cents during midday trading on Tuesday. The telehealth firm signed a deal with Nuffield Health. That's a UK-based private healthcare organisation. The deal is to develop a digitally integrated virtual and in-person primary care service. Dr. Care added that the deal will help the company increase the scope and volume of primary care consultations. Moving on, automotive retailer 𝐊𝐴𝐳𝐳 Automotive is to benefit from industry conditions. That's according to financial data marketing company Refinitiv. Financial brokerage Jefferies reports that the auto industry sees strong retail demand and short supply of automotive parts. Such perfect conditions are favourable for automotive retailer 𝐊𝐴𝐳𝐳 Automotive. The company's shares are up 12.3% this year. The brokerage has upgraded their financial year 2021 net profit after tax forecast by 14.6% to $260 million. It expects revenue to be at $9.58 billion. The base case scenario doesn't expect strong industry conditions to extend further, leading to an earnings drop in financial year 2022. Jefferies restated the price target to $14.19, rated it as a hold. 8 of 12 analysts rate 𝐊𝐴𝐳𝐳 as a buy or higher, 3 as a hold, 1 as a sell. The median price target, as per Refinitiv data, stands at $16.20. Stay tuned with Kalkine TV for more live market updates. We'll be back with more news on the markets, economy, diverse themes and sectors. I'm Rachel, signing off for now.